Republic Technologies is an Ethereum infrastructure company backed by an ETH-denominated treasury. The company operates proprietary validator and attestation networks to safeguard data integrity and security for universal applications. CEO Daniel Liu is going to review the company's operations and opportunities and provide a review of the company's 2025 accomplishments and outline expectations and an outlook for 2026. I'm Martin Gago with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Daniel, welcome. How's it going?
Oh, well, Martin, thanks for having me again. And hi to everyone who's tuning in online. For those who don't know me, quick intro. I'm the CEO of Republic Technologies, and I've been in the digital asset space since 2018. So having built one of the most successful exchanges and wallets in Asia, those are called Float SV and RelayX respectively. Then later parlayed that into just being very active in the digital asset space, especially in the Ethereum community. And so now we are building this Ethereum infrastructure company backed by the Ethereum Treasury, as Martin has stated. I think just some really high level overviews on what we've done in terms of, call it, logistics and company structure. Last time when we spoke, Martin, that's when we had just started the pivot to this, call it, Ethereum strategy. And we were focusing on attestations and verifications for medical technology, medical end users, right? And so we still believe that is an extremely valuable vertical, but then at the same time, we have come to realize that what we were doing for the medical sector really applies to every single industry, right? Like people care about their transactions, whether it's payment, whether it's just simply data, the security and integrity of that really is utmost. And so being able to go and deploy our infrastructure, not only for medical technology, but really the broader ecosystem, really the whole world, that's where we see this going. And, very excited to be able to expand and reach a broader customer base.
Last year, or this year, 2025, was a big year. You guys became publicly traded. You got everything in order, and I think the big event, if I'm not mistaken here, is your financing. You announced a large $100 million US convertible debenture facility. You've drawn down 10 million of that. Have purchased some Ethereum with that, and I believe are sort of ramping up operations. I don't know if I let the cat out of the bag. I gave the highlight of what you did last year, but you please give us some more details on how everything came about and what you did and where we're at right now.
Definitely. I will get to the financing in just a second. Super exciting about that. Very excited to talk about it. I just want to kind of touch really quickly on other restructuring points. As part of the restructure, we've managed to get Ethereum onto the balance sheet. So I believe the last time we spoke, we only had a couple hundred. That is in the thousands now. And at the same time, we have also built out the team further. The team has, I believe, increased by 50%. We have 12 folks now actively working to secure clients, ensure the infrastructure is there, and to work to acquire more ETH. And that's where we get into the financing, right? So this financing is extremely encouraging for us. And I think it makes sense to really take you back kind of to the beginning when we were thinking about this, right? And, we started looking at potentially doing financings over the summer. But very quickly we saw that the market was showing signs of weakness. We did not want to take that risk. This entire time we've modeled ourselves after some of our most successful peers. I won't name who, but there is one company that has not bought any crypto since, I believe, September. I think that's a very strong signal amongst the other ones that were perhaps just rapidly buying in the frenzy. We want to take the prudent approach, and now it's paid off since we were able to close that 100 million kind of at these levels, both for the broader markets as well as digital assets. And so it's been really great working with the team, with the lenders that were able to provide this capital. And we are all really aligned on the direction of, not only the company, but Ethereum as a whole. So, with that said, you mentioned we've drawn about 10 million of that. And so, yeah, that's correct. This 10 million we look to use almost primarily for Ethereum. I can safely say that over 85% of that will be used to purchase Ethereum, especially at these prices. And, since we've drawn, we've been consistently purchasing and just averaging down, for over the past, call it, 2 weeks. So that's been great for us as well. Our trading partners who have been helping us do that were able to help us get much better prices than you might see on spot, like anywhere between 50 bips to a whole point lower. That's extremely helpful. And when the market's more volatile, our synthetic mining strategies, which I'll talk about a little bit later, those perform much better as well. So all this is to say we are taking the cash, accumulating more ETH, consistently building out our validator infrastructure using that ETH. And then as of today, I believe our average ETH price is at around 2,700. And so, just very simply put, when you look at that, like we're still in the green, still in the black, some may say it. Whereas most of the other DATs, I believe actually every other DAT is their average is well above 3,500. They were buying in the 4,000s, 4,800s even. So, that puts us at a great advantage above everyone else. And, lastly, before I hand it back to you, I would say that we're extremely proud that we were able to secure really the best terms on the market for this type of financing. So the two things that will keep us insulated in any market downturn are the fact that this convertible facility carries a 0% coupon. So, no interest. We are not consistently being diluted, and there really is no way to default from that scenario. And the other way is that any Ethereum that we're purchasing, we'll have to put that up as collateral, right? Because it is, at the end of the day, a convertible facility. And so when we put that up as collateral, we do not have to take any mark to market. And so what that means is if we put it in today when ETH is 2850, if ETH were to go to 22,000 even, that's like a 30% drawdown, right? But from there, for the sake of our collateral, it doesn't get lowered. Our collateral is still valuing the ETH at the 2850 number. And so we would not have to go and top it up for any reason. A lot of folks, if they do have this, call it top up mechanic in their loan, it would mean that they would have to find additional liquidity in any type of drawdown, right? And so not having no real revenue sources for a lot of these other companies, I don't know how they're planning to do that. We have a very good plan and actually don't even have that risk as well.
Oh, that's interesting. So it stays at its sort of book or cost value. And so in essence, as long as you don't you'll always be sufficiently covered on the loan that you're not going to be forced to top it up or pay it back in that sense.
Yeah, absolutely. Right. So just a very simple example. If we had $10 million there at current prices, if it were to go down 50%, many other deals may require the borrower, which would be us, to then add another 5 million to top it up. And so not being forced to do that, I think would be incredibly bad for the company. And we're very fortunate to not have that mechanic.
Yeah, it takes away that volatility risk. Can you tell us anything about the lender? Is it a private family office, say, or an institution, or anything you can say about that?
Yeah, I mean, they're a Canadian institution. So, very involved in all types of financings. I would say they're kind of industry agnostic. But fortunately, they are bullish on Ethereum. We're great to have them as a partner.
Okay, so besides acquiring Ethereum, and I like the fact that I'm curious with your Ethereum strategy, your treasury strategy, if let's say Ethereum would have another big run up and get to $4,000 or $5,000 or something like that. Let's say the market's looking a little toppy. Are you a holder, or are you willing to hey, let's sell off some Ethereum here. We think it's going to pull back, and then we can reload at a better price, kind of take some profits, so to speak.
Yeah, that's a great question, Martin. I think from the company perspective, we start from the highest level. We will never sell Ethereum. We'll always be
Okay.
buying. Saylor famously said that he'll be buying every single top forever, right? And I do want to follow in that as much as we can. With that said, I will say though, even if we do not sell Ethereum, our trading partners have many ways for us to hedge out certain risk at certain levels that we may deem appropriate. And when I view that, it's like, hey, if you're a oil company, like say Exxon, Shell, any of these guys still have large trading firms, they also need to hedge the price of oil, right? Even
Yeah.
though their main business is gas and supplying all the industries, it's something that they must do for operations. It helps reduce a lot of risk, and we'll be doing the same.
And then as well, like at the very least, if things are looking really toppy, you may pause on the purchasing, wait for things to cool down a bit, and then would that be a fair thing to say?
Yeah, absolutely. And that's what we
Yeah.
did starting from September, right? We saw a few of the other successful ones not purchasing anymore and realized it probably would be a good time to pause as well.
You've said that you've doubled the team, and I believe you said to 14 people at Republic now. Can you, what is what, not specifically the people, but what is the team doing? Are they technical people? Are they business development types? Or can you talk about what the team consists of? And then what are their goals? What are you trying to build out here besides a healthy Ethereum treasury?
Yeah. So with the expansion, obviously, since we were able to go and increase our balance sheet, not only in cash, but in ETH, we're now really focusing on not only BD, but development for the infrastructure. So essentially the validators that we mentioned throughout all our presentations. And so the roles that we've been hiring the past, call it months, have been entirely for that. One guy, can't name him yet, but that we were able to get on board. He previously built one of the largest Ethereum staking services, that was later acquired by Kraken. And so really, really great to have him on the team. Obviously, Kraken's a name that everyone knows. So this guy, extremely reputable, and we'll be working with him along with our validator partners to really scale that up and start offering, call it staking and validator services to anyone in the long term. It might start off with a small tests, and I can't say it will fully scale out until probably later next year, but that we are starting that now and plan to, get as much Ethereum from the institutions, the retail, the family offices in Canada as possible that will be staking with us. And if you want to perhaps call it a direct comparison, Soul Strategies they have a similar model. I would say it's at least adjacent, but for the Solana token, and they also have anywhere between 400 to 600 million of Solana that are being staked through their validators that they're able to generate yield on. And so for us, what that means is, of course, we'll have our own ETH, but we'll also be able to take in other people's ETH. We have the custody, the solutions to make sure that it's fully secure to prevent any headaches that your normal mom and pop might have when trying to stake. And this way, we just want to expand the services, make it more accessible for everyone.
Are you going to need to build out any data centers, or is that all going to be kind of outsourced to third parties more as a service, cloud service type solutions for you guys?
Yeah, we want to stay really light on OpEx in the beginning. So, want to cut expenses where we can. Fortunately, our partners have built out all the infrastructure. That guy I just mentioned who built the firm that was acquired by Kraken is super familiar with everything that needs to be done. And so even if we won't, necessarily build it ourselves from scratch on day one, you can trust that it has been built by the best in the business. And if we ever do choose to build it ourselves, that will be far down the line.
Yeah, and I would presume you would do that once you have enough scale where the economies of scale make sense for you at that point.
Yeah, it's possible, but also at the same time, given how decentralized Ethereum is, there may
Yeah.
be a chance that we never need to incur those costs, which
Okay.
I think it would only help the company and help the ecosystem. Is it being able to really trust someone else in a trustless way to manage
Yeah.
that does a lot for us.
we've reviewed, I believe, the key points of what 2025 has brought to the table, and now we're on the cusp of 2026. What sort of goals or milestones do you have? What do you want to accomplish in 2026, and what should investors be keeping their eyes open for in terms of news flow, milestones that you want to accomplish, and that sort of thing?
It's really twofold. To start, we definitely want to get the validators up and running to their maximum capacity. And the way that will look is, we've already started testing with our own Ethereum that we own. Just, working with the various custodians and the infrastructure to make sure it's all airtight, everything flows. And once that is, fully locked down, we will begin staking our entire Ethereum balance sheet. So that comes with not only the technical side, making sure everything works, but also increasing the balance sheet so that we can support more validators and support more transactions. And you can think of it, so from the technical perspective, the team will be handling that. We'll be able to provide updates as we go. We'll be able to provide all the updates on the returns we'll be generating as well. And from the more financial side, the goal is to continue averaging down ETH, draw more from the 100 million facility, perhaps get a few more fundraisers done, and always be accumulating. And so that's, I think, going to be a big focus. And I would note that the thinking behind this is not necessarily that we want to just only hold this asset, right? I think our thinking is we view Ethereum truly as the digital fuel that will power at least all of finance for the years to come. And so we want to be able to accumulate as much of this resource, this Ethereum right now, so then we can support the future. And so even if today the amount of ETH we have can't support even a 1% of the transactions, we think that it's very reasonable for us to accumulate somewhere between 5 to 10% of the total ETH over the long term. And that long-term view is really what drives us. We want to be able to accumulate this asset before the demand comes. And it's very clear that the demand is coming.
Not people on the crypto digital asset side have varying levels of understanding. You are clearly much more knowledgeable than myself. Can you just give us an update on how Ethereum is doing, not just on the price point of it? In the mainstream news, we hear a lot about stable coins that I think is garnering the maximum attention in the digital asset space. I feel like Ethereum doesn't get as many headlines in sort of common business press as it used to. Just bring us up to speed where Ethereum's at, how it's being used in the marketplace. You say it's to drive a lot of, or even possibly all, financial transactions going in the future. So where are we in that is evolution, and what do you see happening in the next couple years?
Yeah, you got to give yourself more credit, Martin. You know quite a lot. Those are some very, popular terms. So I think everything you just
Exactly,
mentioned.
the popular terms, not the esoteric, knowledgeable ones.
No, no,
So
no. But I would say even knowing that puts you in a small percentage of people. So I think definitely need to give congratulations where it's due. But yeah, I think everything that you mentioned, right? Stable coins, a majority of that, I believe over 65% is on Ethereum. We're extremely bullish on that. We've seen applications already really going out to mass users, even if you call it PayPal's USD. This is something that reaches the average consumer, which is incredibly encouraging. We see the RWAs becoming more and more prolific. There's companies that are tokenizing gold, tokenizing stocks, and I think that's kind of the way that it starts. Eventually, I believe really real world asset will actually mean real world asset beyond just gold, right? I think it could mean your car, it could mean your house. And that's where we see things going, and it's trending in that direction. I think in terms of just call it the entire financial industry, we're seeing a lot of movement towards the Ethereum blockchain. right? Everyone who is looking to build stablecoins, as you mentioned, like outside of PayPal or Circle, like the Bank of America's, JP Morgan's of the world, that's all either on Ethereum or in the Ethereum ecosystem via an L2. We see a lot of institutional funds looking to purchase Ethereum, which, then it fits the narrative. Like they need this resource first in order to go transact on the network. And, all this we believe will drive a lot of innovation and volume for years to come. Because as you and I both know, institutions generally move pretty slow. I'm actually very surprised how much they've been able to do over this last year. That's again super encouraging. But given how slow they move and how fast they have over the past year, I would assume that they are very committed to moving trading services, if not all kind of financial services, onto the Ethereum blockchain. And we start to see this now. Like even the Nasdaq, just I believe this week, submitted the request for 24-hour trading. When you think about it, that's most likely not going to happen on this traditional infrastructure, right? It just can't support it. And so very likely, at least sometime in the future, it'll move over. Guys like EDX, Charles Schwab, already looking at a purely crypto native exchange. Obviously, you have BlackRock at the forefront with their ETFs and even more products that they're consistently pushing. So I would say, we should be in for a great, remaining 3 years of this administration.
With Ethereum, I guess, am I right in that there are, let's say, two ways to make money with Ethereum? If I own some Ethereum, the price goes up. Okay, I'm making money, or I can book, or there's capital gains there, call it. And as well, having like using that Ethereum to help with attestation and staking and so forth, that's another way of creating yield. So, am I right on that?
Yeah, that's correct.
Yeah,
So validators, they you can think of them as similar to Bitcoin mining.
yeah,
Essentially, you have this input, and by securing the network, verifying the transactions, you're able to earn a reward. On Ethereum, that ranges anywhere from 2.5 to 3% on a
yeah.
consistent basis.
Is there necessarily a correlation between, let's say, all these like 24-hour trading is done on Ethernet infrastructure? Does that necessarily correlate to higher Ethereum prices as there's more usage going on, or just the people who are holding that Ethereum are running the transactions on it, clipping that yield for those services, and it may not necessarily drive higher Ethereum prices? Or if, let's say, NASDAQ wants to run it on Ethereum for their own safety, let's say, they'll want to buy sufficient Ethereum where they can run all those transactions off. And obviously, then there's demand for Ethereum to hold it, which would presumably push prices higher. Did that make sense? And can you link the price of Ethereum with its usage for us?
Yeah, Martin, you pretty much have it there. Without getting too into the weeds, Ethereum does not have the same called fixed supply as Bitcoin, but
Yeah,
it does have a very dynamic supply management system that's aimed at, keeping inflation extremely low, and really keeping the supply constant. So, if you look back since the merge, that's kind of when these supply dynamic mechanisms went into effect. We have not moved more than, I believe, like 75 bips in either direction in terms of total supply. So
yeah.
that to me seems like it's working. And so you can imagine if something that has a relatively fixed, or you can at least say, predictable supply, then when demand increases, we would expect the price of the asset to increase as well.
Sorry, going back to 2026, we went on a bit of a tangent here. Thank you. Um, uh, so, in terms of, let's say, news releases, besides periodically and on your quarterly saying how much Ethereum you have on the books, what other kind of partnerships, or what could partnerships look like where you're doing staking and that for partners? Or are those types of things going to be news released? How should investors be able to gauge your progress from the news you put out?
Yeah, I would look towards really like the two verticals that I mentioned earlier. So how quickly we're able to buy ETH and at what price, and how much yield is actually how productive we are with that ETH once we have it. And
Yeah.
so, if you look at some of our recent news releases on synthetic mining and our purchases,
Yeah.
those will consistently be coming out. Synthetic mining is really our way of generating even more yield on top of that base called 3% validator yield that I mentioned earlier.
Yeah.
So I know synthetic mining is another strategy that we learned from the best, and it's essentially selling put options, such that if the price is where we want, then we are able to buy it, and again, significantly lower than where the spot is today. And if it's not where we want, then, but by selling options, you're able to earn a premium, right? So then we just consistently are able to generate that revenue, which will then fund additional ETH purchases. So one way or the other, we accumulate more ETH, and at least recently, our synthetic mining, given all the volatility, it's generated upwards of 120% on an annualized basis. Our tests in Q3 last year did anywhere between 70 to 100% on an annualized basis. So we're looking to really ramp that up as well. And secondly, once we have that ETH, then we want to be productive with it. So I would look for our amount of ETH staked to really increase announcements around there. Well, we have great partners that will be helping us staking. All kind of everything I mentioned in the first half of this call, we'll be making announcements around that. And I would say, as we do, a lot of things I can't say right now, but we are talking to various companies for more partnerships. If you look at comparable validator companies that are in the space, I think it's very reasonable to say that a company like ourselves may get a large, maybe $10-25 million staking contract from a crypto native firm. So Soul Strategies has done multiple of these, and we would look to do the same. The firm itself obviously cannot name, but it's things that are on the horizon.
You acquiring Ethereum, if you're clipping, generating a few percentage points or annualized much higher, the more Ethereum you have, the higher maybe the percentage isn't higher, but you're making out that percentage off a bigger pool, the more you're profitable, the more you're earning in that. So really acquiring Ethereum is very key to your strat. Like that's a very good measure of how well you're doing.
I would say so. An oil company kind of need oil for the gas stations and everything else. So without oil, not much you can do. Um, and I think I'll leave it at that.
We've covered a lot of stuff here. We've got some outlook on to 2026, or just in terms of that 100 million line. Could you imagine acquiring using all that up to acquire Ethereum in 2026, or could that even be done in the first half, or deploying that would that be maybe a multi-year process of acquiring up to 100 million US of Ethereum?
Yeah, I mean I think it'll definitely be based on the market, depending on where things go. Especially call it Q4 this year has been extremely volatile for every market actually. So
Yeah,
we'll be paying attention and looking to make the correct decisions. Hedge when appropriate. I would say though, the goal is to use that all within a year. I can't say if it'll be majority in the first half or in the later
fair enough.
half, but we want to buy very quickly. We want to get the Ethereum productive in our validators as soon as possible.
Okay, so just a rough timeline. So in hopefully by the end of 2026, a little more than a year from when you got it, hopefully everything will be acquired, and you've got a whole lot of productive Ethereum operating out there. All right. I think we're covered the main topics here and wrapping it up. Anything else we haven't covered that you'd like to address or bring up before we call it a day?
Think I just want to leave with a note. You know, a lot of what we talk about is often, counting the short term, even the outlook for 2026, right? It's only 1 year away. And I really would encourage, everyone to think of this industry, this asset, our company as as people who think very long range. We don't necessarily make many decisions based off of what happens in a month or in a quarter. And I really believe this will drive us to be successful. Because, when we started this almost a year and a half ago, the idea was being formulated. I kind of foresaw that there would be 1,000 different types of companies trying to pursue this digital asset strategy. And at the same time, with that prediction, also predicted that there would likely only be maybe 10 to 20 of these that survive. And so today, I think if you look around, we're getting close to that 1,000 number. And that just means that actually there's another 10,000 that didn't even make it to the starting line. So, we're very fortunate here at Republic Technologies, having secured this financing, having been being able to really be at what we view as the starting line, like nowhere close to even the first inning, the end of the first inning. And so this long-term view is something that is proven to really succeed, especially in these nascent industries. In my previous life, we didn't talk about this much, but I used to be in solar, so energy financing, financed over half the solar in California that's popped up. So, we saw very similar market dynamics during that time. Obviously different asset, different players, everything is very different. But if you zoom out during that, you call it a boom, you had very similar guys who tried to perhaps scale too fast, tried to overpromise and underdeliver. And so that's how we end up with the stories like Solyndra, SunPower. I don't remember, like obvious. Oh, Sun Edison was a big name. I'm not sure if you followed that space, but that collapse kind of rippled through the industry for years, right? And so having experience in that, we see the same thing here in crypto. It's really not new. There's no reason for people to be shocked, even though obviously the movements and the volatility is shocking. That's something we've learned to really adapt and harness as a company. So I would say look out for long term. We're here to really protect capital. We're here to protect the Ethereum and make sure it's going to be as productive as possible under our custody.
All right. Well, that seems like a good spot to wrap it up here. So, Daniel, thank you. I really appreciate the time getting us up to speed on Republic and the Ethereum world and the ecosystem. So, thanks a lot. I look forward to watching your news flow and getting you back here in a few months and getting an update on how things are progressing. So, thank you very much.
Amazing. Thanks for having me, Martin.